Welcome back, everybody. We're here again with another trade breakdown, and I haven't done one like this in a while. The previous one that I did was a live trading video, and then before was just like kind of other like educational stuff with like daily bias and going over my performance in the week. Today, I wanted to just do a short and simple process of an A plus forever model that you guys are more than used to from seeing everything on my channel. So let's hop right into the charts and break down everything step by step from what I saw on the day of 11/4 in November. So I have NASDAQ on the left, S&P 500 in the middle, and then I have the Dow Jones on the right. So for the day, we had pretty much the open of New York. We had Asia session and London session just fall off of a cliff. And I want you guys to like mark up this daily chart before I show my annotations on the next slide from what you guys saw as to why price dropped back into this new week opening gap and why we didn't actually trade higher. So pause the video and then I'm going to show you my annotations on this next slide. So if you have it marked off correctly, you would know that we had an SMT at these corresponding highs here with the Dow Jones making the lower high above. We had the S&P 500 also making the higher high. Then fast forward into this trading week, we had Monday's trading day here. We made a lower high as well, while the Dow Jones made a higher high, causing that displacement from Monday's trading day. And you can see the same thing on the S&P 500 as well. Lower high on the daily. Now, moving into Tuesday's price action, what have we done? We have an open of the day that is flat, and all we did during that Asia and London session was drop aggressively. So we woke up to price already down here within this new week opening gap. Now, is there any sort of crack and correlation that you can tell me on this daily chart where price can look to reverse from? Is there any SMT divergence at all on this daily chart? No, there's absolutely nothing. The only thing that we have right now is price trading within a new week opening gap. That is it. This corresponding low has not been taken out on the S&P 500, which is the same low here, which is also the same low here. We took out the previous daily low on the Dow Jones, ES, and NQ. There is nothing that is telling me right now that price is ready to reverse on the daily chart. Simple as that. So if I have that in my head, I'm not going to be just immediately marrying a bullish bias, right? No, that's not what I'm planning on doing. So let's go down to our lower time frames. Let's go look at like the 4-hour chart. So this is the 4-hour chart from what we had overnight. The open of the daily candle was here, it was right here on NASDAQ, S&P 500, and the Dow Jones resting right here. So what we had is this is the last 4-hour candle until we got into the New York 6 a.m. 4-hour candle. And again, do you note anything here as some sort of crack and correlation yet? No. There's absolutely nothing just yet. Everything is corresponding. We just had an overnight bleed session. So moving into this next 4-hour candle, what can we expect? We can either, one, expect this. Price to retrace back into the range or reach premium of the range overnight and then continue lower. Or we can anticipate price to reverse from this point, creating some sort of SMT at the lows to then catch longs back into the range. Or if we don't create any SMT, then we can catch the trade lower, continuing based off of what the daily profile was, which was going lower. So let's go down to another time frame chart. This is the 15-minute right before 9:30 open. So I'm looking at price in the New York AM session right before the open. And what I have here is a low from the 2 a.m. 4-hour candle on all three in the triad. Here, here, and here. Is there any sort of difference between any of these three right now? The only thing that there's a difference is these corresponding lows here. We have the lower low on the NASDAQ, lower low on the S&P 500, and higher low on the Dow Jones. Now, am I going to take a trade before 9:30 open? No. No, I'm not, because there's no high impact news. I need 9:30 to tell me exactly what price is willing to do next. Now, my idea for what was going on in this day, I wanted to see the 2 a.m. 4-hour low get ran, create an SMT on that 4-hour chart to then trade price higher back into the range. That was my idea going into the day to catch a long position, trading back to 50% of the daily range on NQES or the Dow Jones. Now, this is what happened on the next 15-minute candle. As you can see here, the Dow Jones I thought was going to run that low. We did not. We came so close to it. Same thing with the S&P 500. Same thing with the NASDAQ. Now, again, is there any SMT at these lows that we could even frame a reversal from? No. Everything here is corresponding on the 15-minute chart, on all three index futures, hourly chart as well. Everything is corresponding. All of these lows are being taken at the same time as ES and the Dow Jones. Now, can I take a trade without SMT? No, I don't. That is not a part of my rule set. I need SMT to occur to get into a trade. If I don't have it, I do not take the trade. Simple as that. So what did I do next based off of this sort of analysis? I waited because I could tell if I'm going to get a trade off, and we left these lows here that do not have any SMT, that could potentially be my future draw on liquidity. And I'll show you exactly what I did next. So I measured premium and discount from the high of the day to the low of the day on the 4-hour time frame. What do we note here as of right now? We don't have any sort of cracking correlation as of right now within this 4-hour bearish fair value gap. The only difference that we actually do have here is the Dow Jones is in premium of the range, while the NASDAQ is still in discount of the range. But if I'm able to get a trade off within this 4-hour fair value gap, what I would need to happen is an SMT within that gap. Again, forever model foundation. Wait for an internal range liquidity pool, wait for an SMT. Once you have that, then you can look for a trade. Simple as that. So this is the next 4-hour candle right here. Look at what happens. We have the Dow Jones pushing up higher, running into the higher end 4-hour bearish fair value gap. We have the S&P 500 in premium of the range, but failing to tag that high end 4-hour gap. And then look at the NASDAQ. Lower high within the 4-hour bearish gap, also in discount of the range. We failed to tag that same corresponding fair value gap on NASDAQ and the S&P 500, while the Dow Jones created the cracking correlation, allowing price to then distribute lower, taking out that low I was talking about that did not have any SMT divergence. So since we have this 4-hour view, let's go down to the 15-minute chart to see what is going on within this gap once we created that SMT. So this is exactly the time of when that cracking correlation happened. 15-minute chart, we have all these highs being ran above here. That is that high end tag. And we have the lower high on the S&P 500, lower high on the NASDAQ. So what is next for me to do? I need to wait. I have step 1 and step 2 of the model done. Now all I need to do is wait for step 3, which is my change in the state of delivery and my order block or my inverse fair value gap or my breaker, whatever it might be. And my priority will be the NASDAQ because it's in discount of the range and it is also the weaker pair. So we have two aspects of it being the weaker pair, discount and also making a lower high. Where am I going to target? What do I want to see price take me down to? The relative equal lows that do not have SMT from what I said in the morning. So let's go and prioritize exactly what I want to see on the NASDAQ, which is exactly this. We have the up close candle here, right here from 945 that clears these short-term highs. We have a bullish fair value gap, which is the last line of defense for longs. So what we need to happen here is for price to close below that fair value gap or also close below this up close candle here. And once we have that, that is my trigger for price to then take out these lows that do not have any sort of SMT. So this is what happens. Boom. Price closes below the 15-minute up close candle. We close below that inverse fair value gap, confirming that on the 15, and we get our confirmation of, all right, I have had my step 1, step 2, and step 3. Now all I need to do is execute, which is the next 15-minute candle, tagging the order block and the inverse fair value gap. Boom. So I'm in the trade looking for a 1 to 2 risk to reward. Simple as that. And there you go. There's my execution. There's my take profit. And we smooth ran in 1, 2, 3, 4 candles down to the relative equal lows. This is such an easy process, so smooth ran. And the beauty about this is I told my Discord about it. They took it on their own. And on top of that, my mentorship students took it on their own and didn't even need my analysis behind it because they know exactly how I operate. And with also that being said, I wanted to tell you guys that I do have openings for my one-on-one mentorship program, which is like an accountability factor of you basically trading and I'm looking over your shoulder, monitoring every single move that you make. So if you want to have something like that and someone to keep you accountable in your trading, to watch every single move you make, you could just click the link in the description of the video and I can be there helping you every single step of the way. Now, if you guys enjoyed this video and you liked this trade breakdown, A+ forever model setup, you guys have seen this hundreds, if not thousands of times. Give me a like, give me a comment, subscribe, and I will keep on doing more and more and more and more of these until the market stops working. But take care, everybody. I hope you guys all have a great rest of your trading week. Be safe. Don't do anything stupid. And I will see you again for the next upload. Take care, y'all. Deuces.